So our next guests are getting comfortable. We are continuing with the deep dive about how do we finance this energy transition. I have here Dr. Sabrina Schulz and Borislav Kostadinov. Dr. Sabrina Schulz is the co-CEO and managing director of econnext AG from Germany, and Borislav Kostadinov is the director of a Green for Growth Fund from Bulgaria. Thank you so very much that you guys are here. I want to jump right into this conversation. Mr. Kostadinov, what are the main objectives and achievements of the Green for Growth Fund?
Thank you, Malcolm. And maybe by a quick way of introduction, I'm actually Lachlan. Borislav's my colleague, but couldn't be here today.
Oh, okay. I was not informed, but nonetheless, I'm very happy to have you here.
And maybe just to make the connection to what Martin was saying and talk a little bit about where does finance come from more broadly, right? And there's obviously a lot of countries and sectors where we see that the general market are solving problems. They're doing or they will do that. But there's also what we see, a lot of places and types of investments where the general market is maybe under-delivering. And we think, for example, impact investing, which is what we do as a company, is a really big part of how to get there. And impact investing, very simply, is when you explicitly set out to try and do good things for people or planet in everything you do. And that's a little different to the way the traditional financial sector might work, but obviously it has to be a big part of the solution as we want to sort of grow this idea of an energy transition. So we've been doing that now 15 years. We're based here in Germany, but in 16 offices where we invest. And we manage now some sort of sum of funds, just to give a sense of scale, of some 3.2 billion euros across different funds that cover all sorts of topics: mitigation, renewables, biodiversity preservation, social outcomes as well. And the Green for Growth Fund that you mentioned is just one of these initiatives. And that's a special fund in this sense. It's called a blended finance fund. And what that means is that you sort of take different kinds of investors and mix them together to get the best of their different characteristics. And so in this sense, we have public support from the German government or from the European Union. We have different kinds of development finance institutions, the initiators of the fund, the European Investment Bank, the German Development Bank, KfW, but also private investors. And they're sort of aligned in the same mission, but they really need these other kinds of investors alongside them to get comfort and be willing to step into these places or these topics or these sorts of asset classes. And that's where we've seen good success. And so a couple of numbers, that means in practice we've been able to deliver over 1.5 billion euros of really dedicated green finance. And that's reached 52,000 beneficiaries. And these are maybe numbers that some people would say a lot, or some people would say not much. But what we really feel is you need a bigger theory of change beyond that. If you leave behind this, that's something great. But what we really try to do alongside our finance is work with financial sectors, work with financial institutions to teach them about the benefits of green finance. So when you think of your local bank, you don't think of green finance per se, but maybe you should. There's a lot of opportunities there for them. So when we find that we can teach a bank to think that, well, they're more like an impact investor and less that it's a sort of regulatory or compliance issue, that's a really important mark that we can leave behind that's much bigger than just the financing that the fund delivers.
Thank you very much. I want to bring Dr. Schulz into this conversation as well. So, as the co-CEO of econnext, which, quote, starts, incubates, advises, and scales companies or acquires significant stakes in young enterprises and supports them, I want to know, having also discussed the finances, what are the specific challenges for startups when it comes to financing the energy transition?
Yeah, it's an excellent question. So econnext essentially invests in companies that are into hardware, and hardware is very badly needed in order to make the energy transition work. But when you want to scale a hardware company, an infrastructure company, the challenges are very specific. It's not any quick wins that the venture capitalist fund, for instance, can reap. It's about long-term and steady returns that you expect. And that's not really a mold that fits many investors. So let me give you an example of different sources of finance. You've got private equity. Private equity in Europe doesn't usually invest in startups or scale-ups at a really large scale. Private equity wants to see profitable companies and grow them even more. But the expectations on the returns of their investment are usually in the region of 15 to maybe 17% at this time of soaring interest rates. So not really something that scale-ups in the area of infrastructure. So think thermal energy storage, for instance, that's what we do. Or think recycling of photovoltaic modules, that's what we do. You won't see these returns on investment, and you won't see them that fast. Then traditional venture capitalists, they don't usually go into the realm of infrastructure, at least not in Europe. They do digital solutions mostly. And then third important point to say is you've got institutional investors. That would be an excellent match to go into infrastructure because of the steady returns on investment that I just mentioned. However, they are banned by law to go into risky business, right? And that's Solvency II. That's all due to the financial crisis. It's all been done for very good reasons. But it would be fantastic if there were some kinds of changes to this arrangement. And if all this money from pension funds, for instance, would go into this type of investment, I think governments, the EU Commission could do a lot to bring this about. In particular, what we just heard about blended finance, that would be fantastic to solve that issue as well. You know, really leveraging the funding that's there in pension funds, for instance, so the money can work towards something beneficial for the greater good of society at large and for the climate. And at the same time, you could do something with government money to cover the first loss piece of these investments.
That's so interesting. You mentioned some of the examples like the photovoltaic option of extracting energy, not spawning so much investment or not generating that much. Why is it that certain endeavors right now are not as financial? Like maybe could you elaborate where the reasons you see or what could be policies that could be changed that these things are improved?
You know what? It's a very different ballgame whether you're in Europe or you're in Africa. And since the focus of this conference is on Africa, let me give you an example of what can be done there. So one of the companies we invest in is Grips Energy. They largely operate in sub-Saharan Africa. And what they do is they are usually, they build renewable infrastructure for SMEs in the area of, for SMEs that need energy below 5 megawatts. And no bank would go there. Who would finance such a project? So GRIP says, okay, you know what? We cover all the project development costs. If anything doesn't work, we cover the losses, don't you worry. And then they act as energy contractors. So companies that work with them would only pay for the electricity they receive from the renewables project. And there would be no upfront costs, as is usually the case with renewables, as all the capex you have to pay for upfront. And the other good thing is if GRIPS builds this infrastructure, then a company doesn't have to deal with all the technical challenges, and it doesn't have to deal with interest rates that are 20% plus in most countries in sub-Saharan Africa. So no wonder that renewables are not really taking off. So, and then you, last point on this, then you wonder, how is this company making money? Well, because they diversify the risk, because most projects actually do work. So the returns they have on most investments can cover first loss on other projects, and this makes the whole thing very profitable, or very in relative terms. It's still a one-digit figure, so it makes it profitable, and eventually they're also considering issuing green bonds on these projects.
That also perfectly ties into the conversation for the Green for Growth Fund. When what are the main criteria or parameters that projects need to have to be applicable or to be compatible with the Green for Growth Fund goals and principles?
Sure, and maybe just to pick up on the kind of things that Sabrina was just saying, right? This kind of company may have, or probably will have, quite specialized financing needs, and also picking up on this idea of private investors have very sort of specialized needs to be present in an emerging market setting or in different kinds of sectors or where they're not familiar. And that's the sort of fundamental idea around these blended finance vehicles, right? You build something up that has a track record, that has a certain size, that lets them enter in a way that's fiduciarily responsible for them. As you say, they've got certain commitments, they're obliged, they're regulated in certain ways. They have certain minimum sizes of things they're willing to do because it's not efficient for them otherwise. And if you can create those funds or those vehicles, and you can attract that private money in a way that's sort of the big promise of blended finance, and that's where it needs to keep going. So what we do when we look at the fund in practice, we make sure that every single thing that gets into the fund is really delivering meaningful impact. So we've done that now. We have these 52,000 beneficiaries, and we run an online sort of dedicated tool that helps us understand what we're doing for every single one of those final end clients. It collects information on all the characteristics of the particular investment. We work with local engineering companies to confirm what's being claimed is really what is being achieved. But we also then have that sort of real transparency in data and reporting that our investors want to see when you're making a claim, right? You're sort of saying that this is what we're delivering. Perhaps the other thing I would just mention is this idea of you also need to, I think, finance is not enough, right? That's sort of what you were Sabrina was hinting at. You need to do more on the ground. And so you sometimes hear these sort of arguments that there's maybe not enough demand in certain places or for private investors or for international investors to enter. And the way we like to tackle that is you have to really build that demand. You have to be on the ground. We have a network of 16 offices in the places where we invest. And we work with local partners to actually create and market demand. And that can involve all sorts of different things, but just a few examples, right? So you might find the fund supporting TV advertisements in a country, advertising the benefits of insulating your home, or we send engineering firms to audit companies and identify green investments they could make, or we've even developed some sort of digital platforms where we matchmake between technology providers and people that need certain products. And you have to go a little bit further than doing things at a distance. You really have to be present if you want to leave a lasting impact. That's really what we've been able to see in the market.
Dr. Schulz, is this something you can agree with, that going forward with what needs to happen, that there need to be more innovative approaches of making the finances possible when it comes to energy transition?
That's definitely the case. And I can give you one example again from the African context. So what does it take in order for investors to be confident that their investments will pay off? Well, if you had regulatory changes, so if you had regulation for renewables that doesn't only apply to large-scale operations and large-scale renewables, but to smaller-scale ones, a lot would change already because, okay, the regulatory framework is in place. Wonderful. This is a safe investment. And then it would also be fantastic if there was something like net metering, for instance. Because what happens if a small company in a rural area that produces during the week doesn't need the excess solar power at the weekend? Well, it would be fantastic if that could be fed into the grid. And you don't necessarily need a feed-in tariff for that. What you need is net metering. So if the company comes back on Monday and it does require more electricity from the grid, this can actually be calculated against what's just been given into the grid at the weekend. So this very little, this tiny regulatory change would make a huge difference when it comes to confidence of SMEs that this investment pays off, and also confidence of investors.
Thank you so very much to both of you, Sabrina Schulz from econnext and the partner of Mr. Lachlan Cameron for the Green for Growth Fund. Thank you so very much for having been here at the studio sessions for the Berlin Energy Transition Dialogue. I hope you have a great time further in this conference.